Hello, Ric. Thanks for inviting us to your offices today.
Pleasure.
There's been a lot of discussion, certainly since the beginning of the year, over some of the macro risks. What's your sense of that, and how's that impacting, I guess, on your investment strategy?
At the same time that Europe is enjoying a cyclical high in relative attractiveness as a destination for capital, so there's a lot of capital looking at Europe versus North America or Asia, what we're seeing is there's some risks on the horizon, whether it's the troubles of the Chinese economy, which has meant a withdrawal of some part of the capital that's been investing in Europe, or oil pressures in the Middle East, which means a withdrawal of some of the capital there, or the threat of Brexit, or the fact that publicly traded real estate trusts or real estate securities in Europe are trading at a discount to NAV, which means it's difficult to raise additional capital, which means that they're being a little less prolific in their investment activity. Means that we're seeing a little bit, I wouldn't call it a pause, but some of those bumps in the road that feel like a little bit uneasy to the marketplace. Actually, at some level, perhaps selfishly, it's been a little bit of a welcome relief, because at the tail end of 2015, I wouldn't say that we were experiencing irrational exuberance or that it was frothy, but it felt like the first signs that the capital was moving ahead of the fundamentals. So I think we've gotten a time where the fundamentals are progressing slowly and the capital has taken a little bit more pause, even though we still expect that there's a lot of capital coming to Europe.
And you're off the back in 2015 of some successful fundraising.
Yeah.
Who are the interested investors looking at Europe?
Really, the entire world, and that was great. If you went 24 months before, the capital raises in the middle of 2015, there was still skepticism about where Europe was going. Certainly in North America, but really from around the world, there was a question about whether the European experiment was going to survive. By 2015, people had accepted that the European economy was going to hold together, and a lot of capital was looking for, opportunities in Europe and the pre-recovery and recovery possibilities to invest in Europe. At the same time, the US felt to a lot of investors that it was fairly or fully priced, depending on your perspective, and there were challenges in the Asian economy. So not only was Europe at the right time in the cycle, but on a relative basis, it was attractive versus the other major destinations for capital.
How much of a challenge at the moment is putting that capital to work in the market?
We expect it to be challenging. We scour the whole European marketplace for a few handfuls of deals that, create a well-diversified fund for our clients. We're still finding our fair share. We invested at a record pace last year. We invested $3.2 billion, on a business that's now $7.5 billion under management. That's a pretty significant scale. So in terms of investment activity, it's been quite robust.
In terms of Tristan Capital, as it's growing, do you see the strategy beginning to develop differently, or do you think you will continue along the same path that's led to the success so far?
I think it's a good question. So in terms of our DNA, our culture, and our approach to marketplaces, that won't change. How we do things, we're an active investor, largely an equity investor. We like to control our destiny. We like to drive, the strategies that we have. We like to buy impaired assets, fix them for more income, more duration, and then bring them back to the market and sell them on and then do it again. In terms of the execution and the packages and how we raise capital or how we invest it, that may change over time, but not the fundamental investment philosophy. So our general approach to who we are as a business and how we invest won't change, but how we collect capital and what we invest in will change over time based on what's happening in the marketplace.
Ric, over the next 12 to 18 months, how do you see the market? Do you think it's a good time to be investing in Europe?
I think it's a great time to already have capital. I think things are changing. I think that, we're in a European marketplace with, commodity prices that are down 50%, oil prices that are down 80%, the most accommodative monetary policy in 100 years. And there's a degree of uncertainty. And I always say the best thing for sort of creating value is when there's two-way traffic. When there's turbulence and there's uncertainty, then there's difference in pricing. When things are all moving, there's growth and everything's moving in the right direction, there's no divergence in price. There's no bid-ask spread where your experience, your judgment, and your proprietary capital has an advantage. But that's not this marketplace, and that's what I really like about it. It's a good time to go fishing.
Great, and thanks very much for sharing your thoughts with us, Ric.
My pleasure. Thank you.